To our first conversation now, we see Africa is poised for continued economic growth in 2025. We'll discuss the factors driving this growth and key risks and challenges and the opportunities for sustainable development across the continent. Joining us for the conversation, we have Isaac Marshall, investor at TLG Capital, a private investment firm. Great to have you on the show. Happy New Year.
Happy New Year to you, Lottie. It's a pleasure to see you again.
Yeah, it's good to see you too. So, talk to me about the key drivers of economic growth in Africa in 2025. We see most African countries did do well, somewhat, when it comes to some of those macros like inflation and currency strength in 2024.
Look, I think your assessment's correct. I mean, we looked at the intensity of macro shocks that many African economies and frankly consumers, everyday people went through in 2023 and 2024. I think that in many African economies, you're coming out of what is really a kind of a bottom and a really severe set of shocks. And I think that there are two dynamics that are at play here. The first is the dynamic between inflation and currency. So in many African economies, they're net importers of consumer goods, everything from rice to toothpaste. All these goods are imported into the country. And the result is a consistent downward pressure on currency. That in turn pushes the price of those imported goods up over time, which drives higher and higher inflation. And this is very difficult for a central bank to tame because, no matter how high you raise interest rates, you're not going to stop people from buying rice or the core staples that they need to eat. And the second dynamic is for an investor, the same challenges create a liquidity problem where if I'm an investor into an African market, I have to return capital to my investors in some reasonable length of time. And the challenge I face is that there's not enough market participation in order to exit that investment to return capital to my investors. And, we'll talk through kind of some of the specific dynamics, but those are really the two key challenges I see to increasing investment and increasing growth in African countries. And I think, in that context, 2025 looks brighter for both of those dynamics than certainly the last 2 years.
All right, so, looking at 2024, we did hear about the central bank, clearing some of these backlogs and dollar obligations, to, some foreign countries and some manufacturers, here. So would you say there was an improvement in getting money back from Nigeria to your investors? Just looking at Nigeria.
Oh, yeah. Look, Nigeria for sure. Absolutely. I mean, I think we're very optimistic on Nigeria. At the level of the fund, we're allocating about a third of capital to Nigerian investments in 2025, which for a diversified fund you can appreciate is a pretty heavy allocation. And I think when you look at what's happened, I think you've seen stabilization of the banking sector. I think Cardoso's been doing a good job at kind of stopping a free fall in currency, at alleviating concerns about systemic risks in the banking sector. And I think, you still have inflation at relatively high numbers, but there's really been a pause and no one's concerned about kind of runaway inflation, although it is significantly higher than officially reported and with massive negative impact on everyday people. But I think in Nigeria, a lot of the bitter medicine has been kind of taken. And I think at the moment, you see a similar situation in other countries, like Ghana, for example. We're fresh out of a restructuring of the sovereign debt. The Bank of Ghana pushed for recapitalization of a number of the banks. And so you don't have the concerns about negative equity, right? I mean, people were concerned that the entire banking sector of Ghana was underwater. If you looked at kind of the beginning of last year. And now I think that's been resolved. By a lot of accounts, people think that the CD is probably slightly undervalued. Today it's about 15, 16 to 1. It probably has room to go to about 11 to 12 to 1 if you just look at sort of an inflationary-based model. And I think there's a lot of optimism about a new president coming in play, a president who's had experience before. I think speaking about all the right issues, the need to sort of get inflation back under control, the need to, as a corollary to that, reduce electricity prices, enable local manufacturing. I think, when you look at several other African markets, you see a similar dynamic. I think Kenya presents some more concerns, in that I think that they aren't quite as far down the road. Ghana and Nigeria both went through a gauntlet of crazy macro environment, and I think Kenya is a little bit earlier on in that slope.
All right, and definitely we have President Trump now making a comeback. Should be sworn in by 20th of January. So, what does the Trump presidency, mean for most of these top African economies when it comes to inflation and currency?
I think that the two key dynamics here are, one, what happens to the dollar. I think that the policies being pursued by the Trump administration probably portend a stronger U.S. dollar. I think that's certainly what happened in the first term of the Trump presidency. But at the same time, I think that there's a lot of questions about U.S. markets. If you look at, for example, the median technology company in the United States today is 9.9 times levered on an EBITDA basis. So basically that tells you that the average loan being given to a technology company, it is assumed that the company will not be able to pay back the debt and will have to refinance out the debt. So if eventually, people have been talking about a bubble in the U.S. for a long time, and I certainly don't mean to call when that's going to happen, but I do think that there are some structural risks to the U.S. market at the moment that sort of weigh against some of the policy elements. But I think a stronger dollar certainly poses some problems for certainly African local currencies, especially because a lot of goods are imported in dollars. And so that's, I think, one dynamic to watch out for. But at the same time, I think stronger global growth is potentially on the horizon. And I think it's very, very hard to call macro in the short term at that level. But I think if African countries continue to focus on the right priorities, I think that there's a lot of opportunities in 2025 and also the next 5 years.
All right, and talking about the dollar, we see the DXY that's having a run at this point, about 109 points, and it's looking like it's an uptrend, at this point, beginning 2025. So, do you see the DXY, hitting new highs in 2025?
Really good question. I think if you continue to see markets moving in the way they have been, what's essentially happened is that the United States assets have performed so strongly from across both public and private markets that global investors are overwhelmingly allocated to the dollar. And in my view, that is what drives consistent appreciation of the DXY, far above levels where most analysts kind of thought that the dollar would get to. And I think that trend kind of continues until you see economic reversal, right? I mean, we have seen it in the U.S. at the moment. You have the highest level of credit card defaults since 2010. And so you are beginning to see that same impact on the consumer that I think a lot of African economies are feeling is beginning to take place in the United States, where there's really a disparity between, NVIDIA at $3.5 trillion market cap and sort of the average American. And I think, over time, if a bubble does begin to crack in the United States, I think that would have a downward impact on the dollar. For sure.
All right, definitely. I'm sure investors will be watching out to see how that impacts risk assets, in the markets. But what would you say are the key, policy recommendations for African governments, to foster some kind of sustainable and inclusive economic growth for 2025?
I think it's really interesting to get creative about how to attract investment into the key sectors that are needed, right? So a lot of folks talk about electricity. I think if you're in Nigeria, if you're in Ghana, if you're in Tanzania, your ability to get stable electricity that's needed for manufacturing local goods and actually taking advantage of the opportunity that foreign goods are very expensive to actually make things locally. But the problem is that electricity prices are usually a function of interest rates. It's the ability of local electricity companies to get on the ball and build more capacity, but then two, to actually borrow at rates that are sustainable. I think if you're borrowing at 35%, it's very, very difficult to build anything. So I think to the extent that African governments can attract foreign investment into manufacturing, into stable power, into improving core infrastructure, and over time, obviously, education is the way that over the long term, I think a lot of countries will ultimately see the biggest economic benefit.
All right. Thank you so much. Always great having your perspective. That was Isaac Marshall, an investor with TLG Capital. Thank you so much.
Lottie, great to see you, man. Happy New Year. Thank you.
Thank you.